Mm, 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 mm. I'm
Yep.
sorry I lied to you, Morton. I'm
Sorry, I
just
lied to you, Morgan.
Arizona. Huh?
Arizona.
I ain't.
Talking about you, man. What's up?
Nah. What's up, bro?
What's up, Kirby, man?
What's, what's up, bro? I'm trying to get a. I'm trying to get this playback set up right quick. Find it and pick a date right quick. Sorry I lied to you, Morton. All right. Let's see. Let me press play. See if it's gonna play. Yep, yep, we good. All right. All right. Let me put it. What speed? I'm gonna put it on. I guess I put it on 10 for right now. Sorry I lied to you, Morton. I just didn't want to move to Arizona. What's up with y'all, man? Anybody took any trades last week? Anybody had any successful trades last week? Anybody had any trades that didn't go as well as they wanted to last week?
All good on this end. Took a session open around probably around 5:30, 5:40 for a couple of dollars, but it was straight. Took a inversion fair value gap, sell side.
Ooh, niggas is taking them inversions.
Oh yeah, I've been converted though.
Yeah, bro. Yeah, all right. Cool, 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 cool. Cause my partner hit me up during the week. He was like, man, he said, man, he said, I can't unsee these inversions, bro. I said, man, take
You
them.
you can't dog because once you get it, be it the initial one be a sell side or buy side, you really and you see it come turn it back around. It's
Mm-hmm.
just like why not? Like so
It's yeah. Hopefully we come across one today in the market replay.
cool, cool, cool.
But let's see. Let me share my screen. We could get started. Uh, chart right here. I'm gonna share that. All right, share screen. All right, all right. So this date is September 17th of this year. I might have started. I might have get it. I might have just pressed play on it. I'm gonna get it to go all the way to 4 a.m. Well, I'm just gonna fast forward it to 4 a.m. and I'm gonna pause it right there. So I could get a grasp of what's going on, then we could start talking about it and we could take some fake trades. Win, lose, or draw. All right. Cool. Oh, okay. Hold up. Let me pause it right now. All right. All right. We just talked about this. Okay. Just talked about this. All right. Let me rewind a little bit more. But let me draw this out. Let's see here. Put you right there. You should be straight right there. 1 o'clock, 1 a.m. It's the high to low, 4 a.m. All right, cool. So that's my London kill zone. All right. So let's go to the high time frame and see what's happening. Go to the daily first. So, all right, looking at the daily chart from what you think, what's the bias? What was your bias be if you was trading the day? If you was going into the day, you would be like, what would you be likely to trade? Up or down? Would you be like, man, I'm looking to sell the market, I'm looking to buy the market on this day? Or you could be neutral. Or you could be like, I'm set up, I'm set up, I'm trading based on setups.
I mean, based on setups, a little sell. So it might go long, but I think it'll give the sell first, and then if it's going to go long, it'll do that probably in a PM session. But starting out, that's what I'm saying. Starting out, I'll be going sell side today. Consequently,
What your wife said?
she said she talked about the gap below.
Yeah, gap right there, and then.
All right, I draw it out, no problem. This one? Uh-huh. I draw that out. Keep in mind, we are trading inside of this gap too.
Right. But that's the reason. That's even more reason why I said like they have that gap there too. But it still is a possibility it could dip into that one. That's why I say consequent encroachment on that one and then turn around.
Do we have enough information to see if that small red candle after that gap was made is an order block?
This candle? I wouldn't call it an order block. I wouldn't call it that.
Okay.
Let's go to the 4 hour and see what we got on the 4 hour. Okay, so we got these two, we got gaps down here. All right. So look, we traded into this gap on the 4 hour. Used it as a pool of liquidity, took it higher. Let me squeeze the chart a little bit to see where we took it to. All right, so we didn't take it to these highs over here, these relative equal highs over here. And that would be a nice price target, to be honest with you. Over here to the left, to these relative equal highs on the 4 hour. This is a price leg that started to sell off. This price leg swept liquidity. Remember, because this had to be 4 hour liquidity right here, this low. This 4 hour low right here. While we just talking through it right now. Yeah. So this was liquidity. We swept that liquidity. This price leg swept liquidity. Traded to this 4 hour order block right here. Very small order block. See that? Use it as support. Traded higher. Okay. So now I would say I'm gonna put a line right here and say, okay, this will be my buy side target up here. That'll be my buy side from the 4 hour perspective. Sell side being that my sell side target would be this low right here. So I don't know what's gonna happen on this day. I don't know if we're gonna have a major sell-off or we're gonna run. I don't know. We just gonna play it and then we're gonna trade it. Just like, I'm acting as if I'm coming to the market at well, not at 4 o'clock in the morning, but I'm coming to the market to trade. Like, so we just gonna play it like that. So we don't know what's gonna happen. We just getting no practice in. So I'm about to play it again. I'm on a 5 minute. Is anybody comfortable with me being on a 5 minute, or do you want me to go to a higher time frame or a lower time frame? Just let me know. I'm flexible. But
Right.
huh?
Oh, we can go with it.
Hey, we're gonna have to delete that out the Zoom. All right. So, all right. All right. Cool. All right. This price action pretty cool. All right. So let me pause it right here. Let me just say what I noticed so far, and we can keep going after that. So this conundrum of candles right here. This is your Asia session. I normally don't put my Asia session on my chart because is in most times it's consolidation. So I believe Asia goes from 8 at night to what, midnight, I'm gonna say. So this was Asia's low right here, I believe. So we swept that low. We swept both of these lows in London, and London reversed, right? Now, we just talked about the inversion fair value gap. So on a price lead, I'm gonna say this, and I want y'all to like really pay attention to this. When you have on the price leg that sweeps liquidity, when you have a gap on that price leg, like such, even like this one up here, when you have a gap on that price leg that sweeps liquidity and it becomes an inversion, it's highly likely that the market is going to use that gap as support to take it to the upside. Now, I'm not sure what's going to happen. I just paused
Mike,
it. I'm just telling you what I see. What's
Mike,
up? What's up? What's up?
I heard Branch talking about a inversion gap and
Uh-huh.
concentrating on roaches. Can
Yeah,
you,
bro.
for me and also everybody else watching, can you go with what is the inversion gap versus a regular gap? Which one you said you like, Branch?
I'm gonna show you. Let me remove
It,
my box right quick.
I
So,
mean, you got it, Mike. But
okay. You can explain if you want. I'm cool with that.
No, not explain it, but he said one is he said in y'all inversion gap and fair value gap are two different things, right?
It's the
I mean
same
they
thing.
both.
it's just the
Same thing.
opposite of it. It's whatever you get. Go ahead, Mike. I'm sorry.
So look, this is a clear cut example of it right here. So I'm gonna draw this gap out right quick. So I don't want to. So this is very small 5 minute gap right here.
Uh-huh.
You see that gap?
Yes.
So once we close above that gap with this candle right here, we closed above it. Now that gap has been inverted. So now this is an inversion.
And now if it was the opposite way around,
And the same thing.
i.e., it's no matter which way it's going, it's an inversion gap.
Yeah.
The gap is inverted.
It's inverted, meaning it's closed above, meaning
Okay.
it's filled. All right. So
Okay.
it's filled. Now that gap should be used as some type of support. Or on the flip side of it, if it's a bullish gap and it's closed beneath, then that gap should be used as some type of resistance.
Okay. Can you go up right quick to the
To
one I'm looking at right here at the top? The green, that gap
Yep,
was inverted
it's inverted. Yes,
and then used as resistance to
used
sell
as
out.
resistance. Yeah,
Go ahead.
that's true. So now, so that's a good example of the opposite.
Okay.
And then this price leg was the leg that swept the the Asia session. So now here we are in London trying to find us a trade. Now,
And then, okay, one more thing.
what you got?
So inverted
Mm-hmm.
makes it a inversion gap.
Yes, sir.
Okay. I'm thinking of something that's like before it happened. So once it's inverted, now is an
Mm-hmm.
inversion gap, what I would call a field gap.
Yes, sir.
Okay. All right.
Yeah, yeah, that's it. So now, all right, let me get my matter of fact, I'm not even gonna do that. Let me just do it this way. Um then we're gonna get okay from 1 o'clock to 4 a.m. Instead of me drawing a box, we could kind of like have an idea of what's happening, right? So we can see the candles. All right, press play. Now, ideally, this will be like something I'll be interested in trading, and but I don't get to the market this early. But ideally, if we were to trade back down here, to the top of this gap, at least, close to it, I'll be looking to enter. Well, don't tell me what a good time now. But I'll be looking to enter here and take it to this swing high right here, this being my price target. But we're gonna let the market play out first, and we're gonna try to find us a trade later on in the morning. I'm gonna probably fast forward. I'm gonna speed it up a little bit just to see. But that's probably gonna be a good trade. Would have been a good trade. You take this inversion to this high and get out the way. Because I firmly believe that we gonna probably go take this high out right now, to be honest. So from here, from what 681 to 705, what 706, that's a good trade. That's a good trade. So now this gap is inverted. Probably gonna use this red candle as support because that's your order block. Take the order block to the high. And I'm just talking through it right now. Let me move this can. Let me move that out the way. Matter of fact, I'm just take it off the screen. Okay. Then we created this very small fair value gap on a 5. Let's see if it taps into that. Does. Okay. Taps into that gap. We should take this internal liquidity external. Let's see. Let's see what happens.
Mike.
What you got, brother?
Can I get a Y on that imbalance up there on a 5-minute wick?
What imbalance? Up here?
Right there, right, yeah. No, come down.
Right.
Yeah, put a Y on it for me.
All right. The whole wick?
Yeah.
All right, gotcha.
Close inside it, right? All right.
Yep, there you go. That is, yeah, okay, cool. All right. So as the candles are printing, all right, on the 5-minute, um, and my my thought process as I'm looking at the market, like how I'm talking right now, this is how I'm talking to myself. So normally I'm talking to myself out loud, just saying what I see in the market. So, and then if I don't, at this particular time, if I don't see a trade to take, then I'm going to a higher time frame just to see what the bias is on a higher time frame. But for me, it's highly likely that we're gonna take this high out right here. And then after that, I want to see what we do. Do we continue to this high? Does the market, get aggressive to the upside? Do we sweep or are we playing like ping pong today? Right. So as these candles are printing, I'll just go to a higher time frame to see what's going on. Right. So then higher time frame says, okay, we inside this 1 hour gap. We got this high inside of the gap. So that could really be your price target. At what's this? 726. Let me get the high. Yeah, 726.75. That could probably really be your price target. Right. So but it's still 5 o'clock in the morning. If anybody trades this early,
I'm out.
yep,
Right.
trade.
I'm out of my trade.
You're out of your trade. Now, this let's backtrack a little bit. Now, if let's just say this is normal trading hours for us, right? Let's just say that this inversion would have been entry, right? And here's why. We swept liquidity, swept Asia's low, we reversed, we closed above the gap on the price leg that swept liquidity right here. Closed above that gap. As you can see, we used that gap as support. We didn't come all the way down to the bottom of it, which would have been perfect for me, but we didn't. That's fine. So we use this inversion as support. Now, this entry, I would have taken this entry to this high right here. Now, being that we have a gap above us, that's probably 5-minute premium. It's highly likely that this swing high is my price target and I'm done. I'm out the way. But this trade already happened. And so now let's see what else happens around the
Hold
day.
on,
So now,
hold on. Like, slow it down, slow it down, slow it down. Stop it, please.
I
Can
got
you? I know we ain't do no orders, so I done did the imbalance. And you're on NQ. So I
so
don't
from
know if you is Branch on NQ now?
yeah, all of us trade the NASDAQ.
To me, on I think so. If I'm playing ES, if I find a gap on ES, I'm more likely to take the fill of the gap. But to me, some on the NQ, I've had more success just doing the why oh I can't think of the name of this thing, man.
Imbalance.
No. The imbalance good on both of them. The gap, bro. The gaps are filled. And what's the thing when it go back to it, bro? What the
Inversion.
no.
Constant current encroachment. What you talking about?
No, bro. It's simple. Go simple. Go all the way throwback, bro. With the
Uh,
tested, filled. I can't believe this, dog.
me either. I don't even know what you're talking about. I don't even use
When
that
it
like
go back through the after it fill it.
You
Retrace.
mean retrace?
Yes, ma'am. Oh man. For
lay
the
off the
in
weeds.
for the
I
NQ.
was about to say retracement.
Yeah. All right now. I'm more the NQ, I take the retracement more than I take the fill.
Okay.
Because the retracement seemed to work out better for me. So can
Okay.
you do and seal this gap retrace that it just went into if it fills it?
What gap?
The one that is in right now.
This gap right here?
Yeah.
Okay.
I'm
It's
kind
probably
of we kind of going through we both going through this time frame, but I'm just kind of throwing my trees out there that I probably be looking at. So the retracement will be the other one if it does it. I think that's
okay.
fine.
Okay. All right. All
I
right.
don't know if that failed or not, but that would have been another one I'd have been out of.
Okay.
I can't believe I couldn't think of it. Go
So,
it.
all right. So I'm gonna pause it right here. And let me tell you why I'm gonna pause it. I'm gonna go to a higher time frame. So this 1 hour candle just opened, right? So all in all, now, and I always tell y'all, like for me, my trading preference, like I use the 1 hour chart as my daily chart most times. So this is consolidation, right? That's nothing more, nothing less than consolidation, right?
Yes, but
So
let's just follow that motion, and the prosecution connects you to that gun in any way. We're done. You're getting the knee. It's not my gun. And if you believe it's my gun, then why
Yeah,
the fuck are you on my team? James, he has a point. Don't make it
I had to
personal.
mute him, Mike.
somebody,
Deduction.
I thought somebody was talking. I was like, wait, hold on, what's going on? I'm being nosy. But
Good morning, bro.
Deduction.
My fault.
what's up, man? But so this is consolidation. So I'm looking at from the perspective of this. We inside of a 1 hour gap that's bearish. Also, we have a 1 hour high here, and we got this 1 hour low here, right? So naturally, these will be my price targets, right? So I'll be looking to get out the way or see what happens once one of these highs or lows are taken out, right? So this is just a higher time frame bias. So just looking at, okay, this high is at what, 726.75. This low is at 657, right? So I'll be looking to see from a 5 minute perspective what's more likely to happen, right? So let's go back to the 5 minute. Let's play it. Let's keep playing it because it's just 5 o'clock in the morning right now. So I'm gonna kind of speed it up just a little bit. Uh, now look. Now we tapped into this gap, right? So far we respecting it. So let's see what happens. So If we close above this, we did. Okay, so it's probably going to be an order block. So it's probably going to use it as support to go higher or not. We'll see. Let's see what happens. We still respecting the gap. Cool. Now we got an energetic move to the. Okay. All right. Okay. 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 All right. All right. All right. Okay. All right. Okay.
Can you pause? You paused it?
No.
Can you do y'all? And I'm asking everybody who's trading futures. Are y'all calling that a fill of this gap up top?
No.
No, all the way through, right?
Yeah, it's not a fill.
Okay. Now, remember I was talking about the retracement, right?
Uh-huh.
So when so if I'm looking at that gap and it came up that high,
Uh-huh.
obviously I don't get into the trade to get the retracement, right? But
Right.
next time it goes in there,
You're
now
looking for the fill.
I might not take the retracement that time. You get what I'm saying? Because it pulls so many orders from it. I'm thinking if it come back in, it's possibly going to fill it and run through it that time and invert it like y'all
Okay.
did.
Okay.
So by going in there, I didn't get the entry. Now I'm taking that. I'm shelving that trade. I don't want the retracement on it no more. I'm out of the way. So if it come back up there, I'll just see what happens.
Okay.
Just like I said, we just going. I'm
So
looking at
look, why we got it paused is if anybody like, does anybody see something like right now that they would trade? Like, all right, look, this I'm entering here. Anybody, for whatever reason. Because I could put a trade on and we could watch it play out and see what happens. No, nobody. So okay. I'm gonna just press.
Wait, hold on.
What you got? What you
I
got? What
don't
you
know.
got?
Okay, so you see how they have relative equal lows all the way to the left?
Right here.
No, all the way to the left. Like at the top, inside the gap.
Inside the gap.
you talking about the
Yeah.
imbalance. You talking about what they
Is
have drawn out?
Right here.
is
Yeah,
that
you
8
threw that.
o'clock? All the way like 8 o'clock at night.
8 o'clock at night.
To
Over here.
the yeah. Are
Uh,
those would that be considered no above it, inside the gap?
oh, this?
Inside the highlight area. I'm sorry. Yeah.
This right here?
Uh-huh.
What about it?
Would the price now want to return back to that price and then go up to the high?
Kind of did it over there. It came down.
Um, it
Yeah,
kind of that see these candles took that out. These
Oh.
candles right here, right?
Mm-hmm.
So all in all, what you're looking at, right? You talking about this cluster of candles up here.
Mm-hmm.
So basically, what this is consolidation. You got your consolidation, you got your manipulation to the downside, and then you got your reversal to the upside. So now, if I was a betting man, which I'm not,
then also, oh, go ahead.
go ahead, bro, go ahead.
Um, when I get a gathering of consolidation, like on a 5 minute, he already looked at the 1 hour. I would be going 1 hour and then probably 4 hours to see if it's actually a level that we're dealing with because the time span is so far.
Mm-hmm.
So when y'all get and I'm talking to we're talking to everybody who watch the videos. When you get candles that gather for that long period of time, um, go like hour like Mike did, and then you might have to go 4 hour and see if these are levels that keep on getting rejected. Again, the 1 hour, those are levels that's getting rejected on a higher time frame. So
Mm-hmm.
that's why those 5 minute candles keep gathering in the
So
same.
not to
I
get
know
not to
y'all
get too
probably
far
know that.
not to get too far off though. I said not to get too far off, but how would you deal with that if you're on a certain time frame? If you're not you short term trade, you're not a day trade. How do you deal with that? Because you go to that.
Okay, go ahead,
So
Wayne.
um, for me, I would probably wait for a break on that bigger time frame and then find me an entry to see if it breaks like Mike showing a 1 hour. If I get a 1 hour break above that area, obviously on the 5 minute is gonna be a break. You know what I'm saying? And then I'll be looking for another fair value gap or inverted gap. So I wait for the hourly break and stop doing the back and forth with it because it's consolidating. And
Mhm.
then I would find that fair value gap, that inverted gap, whatever it is, once we get a clear direction because it's consolidating on a 1 hour.
Mhm.
Mike then put a trade out there that went. I put one that went, and then now we're looking for another one. So it might
So we
we might
actually
have
gonna
to
take
wait
a
for something
trade,
to happen on a bigger time frame.
right? But
Then
I see something brewing right now. I ain't gonna hold you.
okay,
Um,
go with your uncle.
so 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 I drew the fib, right? On the 5 minute range, right?
Okay,
Highest high, lowest closure on the body, right? So you got your premium, you got your discount. You trade into the premium on the 5 minute range. We had a gap in premium. We respected the gap as of now until I press play, but then we have this gap that's in discount. So I'm assuming if I was a bet man, I'm assuming that the market is going to try to return to this gap that's in discount, and I could be wrong, but let's just let it play out, and then let's try to find a
what
trade. What
y'all
you
about to
got?
say? Do you wait for it to go down there, or do we have an entry to sell it down to there? Do
Oh, I'm
y'all
about to sell it. I'm about to sell
just
it.
selling right now?
No, no, no. Let me
Are
show
you
you.
waiting for
Let me
what?
show you.
Oh, the gap.
Oh, hey, hey, hey.
Duh.
I'm about to show you. So here's my trade, right? So, and this is the reason why I would take this trade. We traded into the premium of the 5 minute range.
Mm-hmm.
Um, Respected it. Created this order block, small fair value gap. Looks as though we about to trade back into it. Now, I enter this trade here, put my stop loss at the high. If I get stopped out, cool. It's part of doing business. But the reason why I'm taking this trade is because we're in premium of the range, of the 5 minute range. And I'll just be looking to take it to these relative equal lows down here that's right above the gap that's in discount. So let's
Wait,
let
and Mike, hold on. The
what you got.
reason I know I was talking about the retracement.
Uh-huh.
So the only reason I'm not taking that retracement,
Mm-hmm.
and possibly I would probably want to go further like you. Only reason I'm not taking the retracement of that gap is because it's a small gap.
Yeah.
I ain't got the number on it. So that's why.
Order submitted.
I'm with you.
But not saying it's not gonna sell. But
But I don't know. So this is, and we gonna this
what's
is
this,
this
bro?
is part of the experience of learning how to trade and just taking your trade.
And you see how you saying the top of that candle is the
Order
top
filled.
Mm-hmm.
You see, it's way bigger than my that gap, that retracement I'll be playing. So the risk of reward wouldn't be there for me on the trade that I'm taking, not the trade Mike. What's up, buddy? Hold on. Let me mute.
Order submitted.
For my stop above the high, my price target is, I ain't gonna hold y'all. This will be my price target.
Order submitted.
And we gonna let it rock. Now, um, look, I'm about to get stopped out. But so yeah, come get me. Come and get me.
Mike, which stupid, bro. Would you would you have look what you that's the lowest you go is the five, right?
Order filled.
Yeah, so all right. Yeah. Oh, wait. Hold up. Let me pause it right now. Let me see how much money I lost. Like I'm really trading today. Hold up. I don't like that. $140. I gotta make that back. All right. So look, do I go to lower time frames? Like the 1 minute? Like that's what you about to ask me?
Well, not. I mean, just anything lower because I would. The main question would be for something like that, and this is just asking your opinion on it.
Mm-hmm.
You see it on that time frame on that five.
Mm-hmm.
Would you go to, or how do you feel about going to a lower time frame to see if there's anything confirming on that to help you feel even better
Order canceled.
and feel more comfortable taking it on the five? Or is
No.
that ill?
So the lowest time frame I'll probably go to is the 3 minute. I don't like the five. So like the 1 minute and the 15 second and all that stuff. I don't relate to it.
I got you.
I just because I need more information, and I know the 15
Hey,
second
bro,
1 minute.
hold on. What kind of internet y'all got?
Why?
Man, when I go to the 15 second, my whole computer is shut down. Be like, what you doing here?
But
we got Verizon.
Yeah, I gotta give a Verizon.
so
Yeah.
so what happened? So now last week I traded, it was a winning trade. This week it's a losing trade. Now I only lost $140, and that's something that I'm willing to risk per trade. That's cool. I'm willing to risk more than that actually. But I lost that trade today. So now this is what we got.
We know it's light work, big money.
Oh boy. So look, this is what we got. So I entered here, right? I got picked up. I made, trade went green for a little while. It reversed on me, right? Closed above the gap with this candle.
Right.
Closed above the gap. Now I use it as an inversion. Okay, so now my bias now is we're going to get this 1 hour high. Now my bias is flipped. Just like that, quick. Because now, if I go to the 1 hour, look at the candle now. See? So now I'm under the impression that this is the price target now. Instead of us trading lower to take this out first, this is the price target. Now, am I going to take this trade? Nah. Naturally, I'm
like
not.
a 2-3-2 reversion.
Oh, man, come on, bro.
Right.
Just do. So now I'm pressing play. I got to.
So that's your if this then this scenario. I mean,
yeah.
Work around. Okay.
And sometimes you got to risk a little money. Sometimes you got to take a loss.
Right.
That's cool. All right, but
I got a question for you.
What you got?
So, if you could do your horizontal on just the line, your stop loss was that high up here. Which
this
one?
High right here. This high right here.
This one.
This one right here.
That one.
This
and
one.
The first red one, right?
Mm-hmm.
Do you, once you got the closure? Well, you was hit. Yeah, you was hit already. So I was wondering if you seen it close above or invert that small gap that we was looking at. Do you wait for your stop to get hit, or do you close it out right then and there with a little bit more,
That's a
instead
good
of
question.
it being 140, would you get out with $100 loss because now it's inverted that gap and now you're like, oh well, it didn't hit my stop loss, but it inverted the gap. So let me just get out the way.
You can trade like that. I mean, if that's your preference. For me, I'd rather sit in my trade and let my targets get hit because mentally it's a psychological thing. So it's like if you're not willing to sit in your losses, you're not going to be willing to sit in your wins. So so if I just let the trade play out, it's like I'm going to the table saying I'm going to the blackjack table and saying, look, I'm here. Take this 140, and I'm planning on making $1,000. If I lose the 140, then I just come back with another 140.
Right.
You see what I'm saying? So for me, it's just a psychological thing, just to sit in your trade and let your stop loss get hit or let your profit target get hit. Right now, I will say this: if the market is extremely volatile and I'm in a trade and I'm in profit and the candles is printing like crazy, like they doing crazy stuff, I'm gonna get out that trade in profit. I don't care if it's just $45. I'm gonna take that. I'm gonna take that because you acting crazy. Right. And I don't like when you act crazy, and especially when you do that in front of company.
So, question, Mike, do you learn that? Did you journal in the beginning? Like, do you journal still? Or?
I still journal.
Right. So that's how you learn yourself, pretty much. What I'm asking, right?
Yeah. So what happens is it's a psychological thing, and once you have enough data on yourself, you start realizing this is what I do wrong. So naturally, when I first started trading, if I see I'm up $500, I'm taking it. But then in my mind, I'm like, man, but I know where it's going. So instead of me hugging my trade and locking in profit and letting the trade run to my profit target, I'm just getting out the trade instead of just letting it flow.
Okay.
You know what I'm saying? So now I just whatever happens. Like if I enter a trade and my stop loss get hit, then cool. That's just what it is. But I'm gonna have the same energy on the flip side of that. On the flip side of that, when the market going in my favor and it's running, I'm like, all right, so I'm sitting in this too. I'm a sitter. I'm a squatter.
I'm both sides on this part. Because that first candle that inverted it was it was super close to your stop loss. So I probably would have set now and let it hit my stop loss. But I guess if it was like if you spotted the reversal and your stop loss was like a negative 500.
Oh no, indeed.
And you know what I'm saying?
Out. I'm getting out of that street.
And you would get out soon as it shows that sign of reversal.
Yeah, and then I'll let it play out.
It is close on that one, but in theory, I don't think I'm gonna sit if I spot that reversal, and it's starting to go towards my stop loss. I would probably just cut it loose because I spotted the reversal, not because I'm afraid. It's just like, okay, it didn't hold on to, it didn't hold on to this area that it shouldn't have never broke below this level or did this if it was going to be going in my direction.
Yeah.
So just giving y'all a few signs of it.
But it's all a psychological thing and how you view the market, and really it's really you. It's you trading against yourself, really. You know, you trading against the market, but you really trading against your tendencies. And you know what you do that hurts you when you trade. You know, you've been doing this long enough. You didn't look in the mirror long enough. You know, when I lose a trade, I go on tilt. So when I lose $140, I'm getting right back in the market. And I'm just pressing the button. Somebody laughing. I know I'm stepping on somebody's toes, but at the end of the day, you got to be able to just take your losses. It just come with the price of doing business. Every day, you know, this not McDonald's. You're not gonna make money every day. You know, McDonald's make money every day because people buy, you know, the French fries.
Some people just buy the coffee, bro.
Sometimes you're gonna take a loss. Some people buy the coffee. Some people like me, I get my, you know, I'll go to McDonald's, get my senior citizen breakfast, my sausage biscuit and my coffee, you know, and I talk to Mr. Round on them for about an hour and a half in the morning. And that's what we do. But let's go.
Branch, that question's for you. How do you go about it? Do you wait for your stop loss, or if you spot a reversal, will you get out even if it didn't hit your stop loss?
So and this is the way I practice. A few different things. I only got this way after just trading straight, like just taking my, you know, taking a stop loss away, that not moving none of that. But sometimes if I see it, I'll jump in, and I'm like, well, damn, I missed it, but I know it's going to come back down. I'll just hit the reverse button. But
that's dangerous.
I'm feeling very strong about that. Again, listen, I feel very strong about that, but I don't do it often. But I only know to do that based on like one of these short things. Like I'm talking like when Mike talk about if you gapping out a London session. You see what I'm saying? Like it's like the chances are I'm good if I got in there wrong. But mostly I sit in my trade. I sit in it because if I move, I know me, I'm real skittish already. If I move, I'm gonna keep moving. And
I got that. That's good. That's good.
But again, I got to the point of sitting still before I started hitting that reverse button. That's what I'm saying. Like it's layers, and I still don't make it a practice. Even journaling, I know his answer was gonna be he journal, but I just wanted everybody else to hear that because it's important, bro. It really is, and he had to stay on me about that. So
you got a journal.
Was that?
Yeah. Because let me tell you why. Because it's like you getting so much information about yourself when you journal, and also like what I started doing is I write down like my mood. The mood I was in when I was taking this trade.
Yes, sir.
Like man, my kids really pissed me off. But I took this trade, I was wrong. And it pissed me off. My kids pissed me off even more because they made me take even though it wasn't their fault, I'm writing all that down because you just self-scout. You always got to self-scout when you're trading. There's always a self.
I mean, technically, Mike, it is their fault. But go ahead. All right.
But you know what I'm saying. But they ain't make me press the button.
Don't blame my nieces and nephews, nigga.
But it's what I've learned about trading, and trading is such a psychological thing that once you're able to master your emotions while trading, you don't care what the outcome is. So for me, I've learned to just sit in my trades. Right. So, you know, just like the other day when somebody in the group chat brought up somebody else's name that's going to remain name, they brought up somebody else's name. Yeah. And then They didn't even hit me up and say,
And
Mike,
now
they didn't even, look,
I cashed out them the
look,
money
Brian,
though,
they,
bro.
look,
I
they didn't
sent
even
Nell the
hit me up
money.
and
Deduction,
We ain't gotta
deduction.
bring that up. I sent Nell the money. We don't have to bring that up.
say, bro, look, they didn't even hit me up and say, Mike, what you think about this? They said the nigga name in the group chat, bro, like it's blasphemy.
I told this man cover his ears, and he sat there. Who knows what you
You
say?
should have, you know what you should have did? You should have created another group chat. But look, so even on that day, it's like, when it's you got to sit no
I
trade.
got the answer too.
When
We're gonna talk about that. We're gonna talk
yeah,
about that. I got the
yeah,
answer.
we're gonna talk about it for sure. We're gonna talk about it. So when you're expecting a like a big range day, those practices when you sit in your trade, even when it hit your stop loss, those are the days that it really, really benefits you to sit in your trade because you were like, man, look, we probably gonna come get this daily low. I'm gonna sit in this trade and I'm just gonna continue to move my stop loss and lock in profit. Those are the days that sitting in your trades benefit you. Now, I'm gonna be honest with you. You might see your price, your P&L, your P&L might be $1,500. You be like, you know what? I'm good with that. I'm out the market. And that's fine too. It's more than one way to skin a cat. The question is though, you just got to figure out why you skinning the cat. And once you figure out why you skinning the cat, your method of doing it is always going to make sense to you. And that's all that matters because you the one pressing the button, you the one sitting at the computer, you the one taking the trade, you the one doing all the work that goes into taking the trade.
That's a dog.
You know what I'm saying? So however it works for you, you make it work for you. So now like we said about 15 minutes ago that we probably gonna come get this 1 hour high, which is this high right here. So let's see what happens. That's how they play out. Let's see. So what time is it? It's 6:15 a.m. on this market replay. So we're gonna keep once we go get that 1 hour high, I want to see what the reaction from it. Does it give you a sign of reversal, or does it look like it's gonna be a continuation day? All right. So high taken out right there. So now once the high is taken out, you want to see an energetic move. Now, I ain't gonna hold y'all. We gotta close beneath this. We gotta close beneath this for me to be like, all right, we're going to the downside. All right. Okay. All right. So what time is it now? It's 6:30. Okay. Yeah. Yeah, we about the electric slide, man. Let's see. Okay. All right. All right. All right. All right. What you got for me? See, all right. Here we go. Now I'm interested. Now my roast attendance is going up. All right. Let me pause it. So now, this is the conundrum of trading. Now this is where your psychological, analytical side should come out, right? So we swept this 1 hour high, which was London's high as well. Let's go to the 1 hour. So let's while we got the market pause right here. So they had this 1 hour high that was inside of this gap that we still trading inside of. Okay, cool. So we swept it just now. All right. So now on the 5 minute, you have you got your sweep with this candle, this wick. Now you have an energetic move in the opposite direction. I said, look, we got to close below this price league before I get interested in taking this trade. Now, do I have entry criteria right now for me to take a trade? I don't. So let's just see what happens if we get entry criteria. Or wait, let me pause it. Would anybody else take this trade? Would anybody be like, you know what, I'm selling this right here. I'm selling this. Would somebody take that sale?
Order submitted.
Would you be waiting for a gap? Would you be waiting for what you looking for at this point in the game?
I will be, I'm
okay.
sorry.
Wait,
I'll be waiting for a gap.
Uh-huh.
Also, I will wait for this particular candle that's printing right now to finish printing.
Mm-hmm.
And that green candle before this long red candle is that okay? So listen, I'm murky on the order blocks, but is that an order block?
It should be. It should be used as one. Yep.
Okay, yep. So then I would sell if all those things.
Okay. Happen. Okay. So let's let it play out. What you got?
Order canceled.
The reason why I would sell, again, that depends on what this candle does when it closes, the current one.
Mm-hmm.
Because I'm looking at that. If it doesn't go above where it's at right now, and it close lower, of course we got a gap. And now I'm looking to the left, that long red wick. What, 2 over? Nope, you come back right there. That's the longest wick right there in that run. That red one. I'll feel that consequent encroachment of that only because it's inside of that gap. That wick.
Okay.
You know what I'm saying? And so that's confirming for me. So now I got 2 things that I'm rocking with. And I got a bias because we got this. If you look down there, you got another real swing low at the bottom of the run. I'll feel that because that's the lowest swing low of all of those swings right there. And it's relatively equal low. So I got a lot of things confirming. And if that happens, if this is a 5-minute gap, I'm selling.
Okay. So let's see. I like this interaction. I like this. Okay. Boom. So, okay, let's let it play out. That was your entry. Let's see if we going. Let's see if he offer you fair value. If we offer you fair value, let's take the trade. I think the entry was the change in the state of delivery right here, though. Okay. Price target for me will be this gap. That's in discount. Yep. Let's see what happens. Now,
can you point out that change in state of delivery again, please?
Sure. Sure thing, buddy. Horizontal line. Change in the state of delivery. Now, the reason why I call this is a change in the state of delivery is because this price leg swept liquidity. We reversed. We closed beneath that price leg. So the delivery went from bullish to bearish. And as you can see, it was respected. That's why I asked if anybody would take this trade. And the reason why I asked that was because last week I took a similar setup, change in state of delivery. But I just wanted to see if anybody else would be interested in taking it.
You got to change the state because that was the last leg for the run.
So
once it broke it, why you?
Yeah. So once you you close beneath it. So it had, for me, a change in the state of delivery has to come after liquidity has been taken, right? So this was the 1 hour high that we swept, reversed, changed in the state, use it as resistance.
I guess that's what I'm asking. The real question what I'm asking is that line that you drew versus your 61.8 down there at the fake swing low.
Right here?
Yeah, even if you want to call it the wick, why do you choose the one up top versus the one below?
Well, this is the fib, this is the range. So the 68, that's on the range. So
now I was giving you it wasn't because of the number. I was trying to see those 2 areas where I don't know if you would call this one a stop sign, but what made you pick like the higher run versus the lower?
This dude disrespectful. So what made me do what? I got confused.
What made you pick
something about
where you had a horizontal line versus the other one, the with the fake swing low. That's around that 61 area. You get what I'm saying?
So why would
Yeah.
I? So why would I
Why
enter
did?
my trade here instead of down here?
Yeah.
Because this is a change in the state of delivery. So when you have a change in the state of delivery, you got an energetic move beneath. You get an energetic move to the downside, a closure beneath the change in the state. So it's highly likely that the market is going to come test that change in the state and sell off. And so now let me say this full disclaimer: Mike would have took this trade, but I asked if anybody would have taken this trade because I just wanted to see, what the temperature of the room was. Because I took this exact same trade last week when we did the market replay. But because everybody don't like taking a change in state of delivery. Most people wait for gaps. And that's cool. You know what I'm saying? But I just wanted to ask just to see if, that was something that y'all were comfortable in trading. Me personally, that would have been my trade. I'm looking to get out right here, and we kind of like almost hit it. So that would have been my trade. I'm done trading for the day. But the object of us doing a market replay is for y'all to be convicted in y'all biases and in y'all trades. So it's not for y'all to watch Mike trade. It's for y'all to be like, all right, Mike, look, pause it right here. I'm taking this trade. And I'm putting my stop loss here, blah, 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 blah. You know what I'm saying? Because that's how we all learn and get better. So hindsight being 2020, I'm taking the exact same trade that I took last week. Price target is the gap that's in discount. So let's see how it plays out.
Then see, I got a question. Once it play out, can I show why I like the 15-second?
Sure. We can go there right now if you want.
And well, I could just say this simply when I see us running like this. Let me get
on my landline.
My landline. But like we were talking about,
my Ethernet call. Hold on, y'all.
We were talking about like our bias was going short, right?
Uh-huh.
But I'm trying to see the time, so I think that's the 7 o'clock candle that we was talking about that made the gap.
Right.
And it didn't. What, a 650? There you go. But yeah, it didn't go into it to consequent encroachment of that, right? Not the other candles. So I'm like, well, I wasn't wrong in my bias, but at that point, I'll bust right. And at this point, I'm probably honestly because I'm 15 minute, 5 minute, 1 minute. I'm executing on the 15-second.
Mm-hmm.
But when I see it's a clear run. You know where it's going. It's going to get it. You know this at this point. Mm-hmm. But I'll look because I don't want to lose out on it, and I don't feel like I'm chasing it. I wasn't wrong, so it's like, well, let me look for another opportunity.
So you'll go to a smaller time frame.
Yes, sir.
Okay.
And I'll get in there because it's going to give you something.
Okay.
Because it's going to your bias.
Okay.
But that's why like when I realized that and he taught us that, I'm like, okay, that makes sense. Because at this point, me going get it again, I'm not wrong. So I don't feel like I'm chasing it. I just miss that. I missed that bus stop. So we're going to run down the street, get on at Reed and Morrison. You know what I'm saying?
Yeah. I'm with you. I'm following you. So that's why you like the 15-second.
Yes, sir. That's the only honestly, that's the only time I use it.
Okay.
Other than that, I'm actually, I'm 15-5 and executing on the 1 minute.
Okay. All right. I'm with you. All right. Anybody else? Any Ashley, you see any execution?
Can I look now? Are you off the 15-second?
I'm back on the 5.
Did you back on 5? All right.
Yeah.
Ain't that bad, bro.
What you about to ask, Mike?
All right, my price target would have got hit right here.
Yep.
Now, I'm going to say this. I'm probably speaking for everybody in here. See, for instance, let's just say you enter your trade here, and the gap is your price target, right? When you see this, when you see it almost hit your price target in reverse, listen, Linda, listen. Relax.
No.
Relax.
Journaling helped me with that too.
Relax. The market is not going to go straight in one direction every time. Now, sometimes the market going to be running and it's going to be full of steam, and you're going to hit your price target, and you're going to get in the trade at 7
Move
o'clock,
your cursor.
and you're going to be out. You're going to be out that trade at 7:02.
I'd have been mad.
But
I ain't
see,
gonna lie.
you got to sit tight. You got to sit tight.
Cause I sometimes for my stop, like if I get a run and I got
Oh, you would have got stopped out.
no, and I'm halfway through the move, I hug the top of the candles. So
Yeah.
like say I probably when you would have got that move to the downside, I would have probably put my stop at the top of that green candle.
Oh yeah, you would have got
So
stopped.
just going candle by candle, and then look, it went right to the top of it and turned around.
But then you spend the rest of the day mad with yourself because you ain't sit on with your first thought.
Yeah.
You ain't go with it.
Yeah.
That's why you do it.
That's
So
when you learn how to sit in them trades. That's when you learn how to sit still because you see it, you know what you see, and then it start doing something and you get lemon booty, and then you get out the trade or you do something else, and then you like Brandon said, you're gonna be mad with yourself because you saw what you saw.
listen, and that's how and this how you evolve as a trader. You when you're able to sit in your trades, right? You're able to sit in your so that's how you catch them big moves. Like, and you're not even most times when you catch a big move, like a 80, 90 point move, you're not even looking to catch that. You just so happen to be at the right place at the right time. And so most times when I catch them moves, like when I catch a big move, it's because I'm looking at it, I'm in the trade already, and I'm looking at my price target, and I'm looking at the momentum of the market, and I'm looking at where we could go, and I'm looking how clean it is on a high time frame, like it's a low resistance liquidity run. I'm like, oh, hold up, brother. Let me just sit in this for a little while.
Brother,
Just like the other day when somebody brought up somebody else's name
oh Lord, man.
in a group that's in the market. We're gonna talk about that trade too. I'm gonna specifically talk about that trade. But anywho, so now let's let the market continue to play out. Now I'm gonna say this: if we were to invert this gap, that's in discount, I'll be interested to see what happens after that. But I don't think we are. I think now the bias is probably going to be to the upside. We'll see. Let's just take a sneak peek at the 1 hour and see what the 1 hour is doing. This candle might turn over. Let's see. I'm not into predicting the future or the past future or back to the future, whatever we want to call this. So now, okay, if we still looking for a trade, oh nah, I'm who hey. This let me slow down these candles. Let me go to 10 times 10 because it's going too fast. I can't talk. Let me rewind it a little bit too. So let me learn you something right quick. Hold up, why is it loading up? I might have went too far back. I might have went too far back. Yeah.
Sensei, I got a seasonal question. It's kind of off topic, but whenever you got time.
Oh, okay. Oh, okay. Then I went back too far. We gotta take the high and then we're gonna reverse. Okay. So let me fast forward this a little bit. I'm back too far. Do.
Order filled.
Let me see how much money that would have been. Let's see right quick.
Order submitted.
Oh, my booty tight right there.
Order
All right,
filled.
cool. I got my $100 and some back. All right. Let me slow it down now. So let's play a little devil's advocate right now. So remember, let me do this right now. Hold up. Play a little devil's advocate. So this was the high, this was the low down here. Boom, boom, boom. The range. All right, so 23%, that's discount. fair value gap that's in discount. You see how the market uses that, and responded to it. So now you can say, okay, well, I'm looking for an entry to the upside. Let's just say you missed this trade. This trade happened before you got to the market. This trade, you didn't trust it, right? So you're like, okay, so I need to find a trade. So I'm like, okay, I'm looking at it like this. I'll say, we invert this gap, I'll be looking to go long, right? So you'd be like, well, we got this order block right here. So that'll be reason to be like, all right, let me just, you could say, all right, let me just chill then. I'm not interested in taking a trade, right? Or you could be like, we invert this gap, I'm taking it to this high. So I could get my money and get out the market and, go get my senior citizen breakfast and go chill with Mr. Darrow now. So, so they could put me up on game. So let me just slow it down a little bit. Let me press play and let's see how it plays out. Support. Okay. Support me here. Close above this. All right. Use it as support. Let's see what happens. We're gonna use this gap again. Oh, not again, but we're gonna use this gap, or we're gonna close above this gap. So once you get two inversions, you know what's up. So we invert this gap up here, which I think we might do. Oh, yeah. It's a party. It's a party to the upside. No.
That's why I like the inversions.
Bro, listen. So here's the beautiful part about this price action. And I'm glad I picked this day. It was a random day I picked. So this is the beautiful part about trading. This is the price action. You could be on either side of the market and be right. Now, if the market is set aside for days when the market is just trending in one direction. So like the market is extremely bullish one day and is just running to the upside. Most days like that, I tend to miss my trades because I tend not to trade on those days unless it gives me like a deep retracement into the range and then continues. But most times when you have a day like that, the market don't give you that. So you just pressing the button and scalping and getting $100 here, $200 there, $300 there. Don't say I'm the only one that did that. I know y'all do it too, but I'll die on that hill. But when the beautiful part about this is because these are the things that we've been going over on Zooms for the last 8 months. You sell premium, you buy the discount, right? So I was selling here. I was early to the party. I lost $142. I mean, $140. I lost. Okay, cool. Now I'll wait for another setup. My next setup would have been here. Took it down to the gap that was in discount. That was my original price target when I got short here. So this is the beautiful part about knowing when to buy and when to sell. Like when you know that the market likes to trade to a discount, you buy a discount. Now, I'm not telling you to buy this gap. I'm telling you to wait for the market to give you a reason to buy after trading to the discount. Right? So some people might look at it as like, oh, we close above this red candle, I'm entering. Okay, that's your setup, you take it. Or other people like, well, we invert this gap right here, I'm taking that. Take it. Like, don't like get analysis paralysis. If you see it happen, take it. If you lose, you lose. Don't worry about losing. Take your trade. So even if you enter this trade right here, if you take this inversion right here, you be like, all right, cool, I'm taking it to the high. You out the way. So you made a quick 25, 26 points. You out the way. Now you're going to watch Teletubbies. You good. You could go watch Teletubbies. You go watch anime. You could drink you a cup of coffee. You could go, you could go chase alligators. Whatever you do in your spare time.
You can go back to work.
Man, you can do whatever you want to do. But these trades, this is like the fundamental basis of taking trades. This is why I always like That's why the 5 minute, the 3 minute and the 5 minute is fundamental to me. Like, like this is it. Because this is what normally this is a normal trading day for me. Like when the market is trading in one direction, then it's really hard to trade those days unless I catch an entry, unless I look up and I'm looking at the Asia session, or I'll wake up in the middle of the night and look at the computer and be like, oh. But when you have days like that, when the market is just trading in one direction, it's extremely hard to trade those days because it rarely gives you entry. It's creating gaps on top of gaps on top of gaps to the upside, and vice versa. Gaps on top of gaps on top of gaps to the downside. But when you have price action like this is easy to trade. It's easy to trade, right? So it was so realistically, we talked about taking 3 trades. Well, it was 4 trades. First and foremost, it was the first inversion to the upside. The original price target was this swing high, right? So that was a trade. That was trade 1. Trade 2 was a loss. Trade Mike took right here. Also, another trade was the imbalance that Winston trades right here, the yellow box. So that's trade 2. So let's say that. So that's 2 wins. The third trade was a trade that Mike lost $100 and some on right here. That was the third trade. Fourth trade would have been Mike's changing the state of delivery right here down to this gap that's in discount, right? So now, even on the next trade, flip side of that, you'd be like, all right, well, I'm just getting to the market. What's going on? Oh, we inverted this gap. I'm taking it to the upside. Well, I'm taking it to the high. All right. Or you go to a higher time frame and be like, you know what? I'm gonna take it to the gap fill. Whatever it's whatever your trade tolerance is. But for me, I'm looking for, my price targets are always going to be swing highs and swing lows on that 5 minute session, on that 5 minute chart, because that's like my bread and butter. So I'm gonna continue to eat the bread and butter. Sometimes the toast, sometimes it's burnt. But hey, I'm not gonna buy a new toaster. So let's let the rest of it play out. Let's see what kind of other trades develop. And if you see something that you would take, don't hesitate to be like, Mike, pause it right here. Somebody speed it up a little bit, because I'm gonna let it go all the way to 10 o'clock, because that's the time I normally shut it down. So let's see what happens. I'll go to the 1 hour and see what's going on in the 1 hour. Okay. This, I don't want to confuse nobody. Let's go to the 4 hour. And this is what I'm doing during the trading day. I'm scanning through the time frames to see what's going on the time frames. The daily. Okay. Just scanning. Just seeing what the bias is. Now the market about to open up in 30 more minutes. So let's see. Let's go back down to the bread and butter. 5 minute. Squeeze the chart a little bit. Let's see what we got. Let's see. This high up here. That'll probably be my next price target. Let's see if we invert this gap here. If we're going to continue to the upside, or we're going to consolidate, what we're going to do. And whatever the market does, you can have a counter punch to it. Right. But as of right now, we're respecting this gap that we created on the 5. We're respecting it. We traded into it, got up out of there. So now we just consolidating up here. Market about to open in a second. So let's see what kind of reaction we get. Now notice we still consolidating at the high of the 1 hour candle. So let's see what kind of response we get going into open. And if you need me to circulate through the time frames, don't hesitate to tell me. I'm here to serve y'all, to help. You know what I'm saying? So if you want me to go to the 1 minute, I'll go to the 1 minute. If you want me to go to the 1 hour, all right. Market about to open. Are we open? Okay. We're gonna manipulate a little lower. Yeah. Let's see. Notice how we tapped into this gap. Oh, okay. Oh, okay. Yeah. Okay. To the downside we go. Mm-hmm. I like it. I like it. So now let me pause it. Now, y'all normally y'all at the computer at this point, right? Y'all at the computer. It's the market open. Y'all looking for a trade. So this is what you see right now in the market, right? So let's go to the 1 hour. Let's see what we got on the 1 hour. I'm sorry. So this is the 1 hour, right? This is what you got. So what would you be like? All right, I'm interested in taking this. I'm interested in taking that. Now I'm gonna go back to the smaller time frame, but just looking at, you know, the higher time frames, what would you be interested in taking? Now we didn't already took 5 trades, but that don't matter. The goal of these zooms is just taking we practicing on the craft, right? So would y'all take this gap, or would you be like nope because we're respecting the discount of the range. So I don't, I'll wait for us to displace the either side of the range. It's what would you be doing? Like, what's your thought process now as the market is moving? Let me slow it down. I'm gonna slow it down. No, Mike, you're pressing the wrong thing. Let me slow it down. Hold up. Hold up. All right. Let me slow the market down a little bit. So what was your price? Any thought process about what's going on now in the market? Would you be interested in selling this gap? Would y'all be with like what you think? With oh y'all
Go
Go
ahead.
ahead, Mercedes.
No, you got it. You got it.
I would have waited till it got to 50% of that gap that it's going into,
Mhm.
and then
So
it
you
pick.
want to put a trade on?
No,
Okay, I'll put it. Okay,
I'm
okay.
confused.
He's
Do you
actually
want do you want me to put a trade on?
Oh yes, okay.
Okay, okay. So let's see. 50% of this gap is so what 715, 713. Okay. So let's go to 713. Did we go to 713?
I think it's good sign.
Don't whisper.
Order submitted.
No, stupid, bro. I'm thinking I'm agreeing with her because if you go over, I'm trying to find a time frame. Just if you could scroll by 8 o'clock.
On a 5.
Yeah, wait, yeah, right there. Go to
Mhm.
8. I think that's 8 o'clock candle. The red candle next to it. Yep, right there. The red
Right
candle.
here. This candle.
No, sir. Go to your right. Around 8 o'clock. Yep, that one right there.
Mhm.
Because that dips into that gap
Mhm.
again, consequent encroachment of that's giving me confirming that's a what do you call a ring low? It's the
Mhm.
lowest point
Mhm.
right and left of it. It's the lowest point, and
Mhm.
it's inside that gap. That's another reason why I would take it as well.
Okay, so
That's
let's let it play out. Let's
yeah.
see if we get picked up. Let's see if we get picked up. Come on, don't leave me standing outside. Don't leave me out in the cold.
All right, Otis.
Yes, this is Otis. Come on, man. So let's see. But it didn't pick us up yet. So I ain't gonna hold you. I don't think we're gonna get picked up. So now let's see. Do, 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 do. Do, 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 do. Do, 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 do. Come get me. My mama said you was coming get me. All right.
Real quick, Sensei. My seasonal question is
You
like
got
we in quarter 4, right?
uh-huh.
Now you trading is different from me trading. Like
Uh-huh.
I still got to go to work. So how you deal with that? Like I'm just saying it is what it is. I didn't get that yet. But how do you deal with like I'm finding myself 'cause I haven't traded a whole bunch
Mhm.
because you got this. It was an election year and we're in quarter 4, and
Mhm.
so sometimes like it's like lately, like this past week, it was just choppy. It was
Mhm.
the wicks were crazy. Things like that. Like how does your mindset change?
In
Being
quarter
on your
four?
side of the fence versus mine, because like I said, I feel comfortable not taking it, but I still got something I'm leaning on, which is that job. So is it different?
So, so the end of the year is always like the end of the year is always kind of like light in the sense of trading, meaning you're not gonna get no don't come around the corner. You said you was gonna come to my front door. You passing around the corner. No, so like the end of the year is always, and I think other like Winston and them could attest to this too, but like the end of the year is always like trash, not trash, but like a lot of people like the market makers and the hedge funds and all them, they start taking vacations towards the end of the year. So the volume in the market is not as significant as it was during the first 3 quarters of the year. And a lot of people are, a lot of hedge funds and traders and
Order
so
filled.
forth, they taking, wait, hold up. They taking vacation. Now, Ashley,
Yes.
Yeah.
this is your trade. Where's your stop loss?
Um,
About the high?
yes. No,
Where you going?
that's where it's smooth. Yeah.
You
I
gonna
would
keep
put
it
it like close to the candle bodies.
right here?
Yeah.
Okay.
And this from Mr. Hayes. Like the reason why I like the wicks too, because say you feel like that's too much heat she'll take, you can go down 50% of that wick that's next to
Order
it
submitted.
or
So
the body.
about right here?
The other reason why I say I would get in at 8 o'clock wick, the red one,
Mm-hmm.
is that yeah,
Right here.
805. Yeah, that one.
Mm-hmm.
If where she is too high,
Mm-hmm.
I'll look at that as a way like as just protection. I'll get behind that 50 or behind the 50 of the wick or at least or the low of the body, the
Mm-hmm.
close of the body.
Okay.
Sometimes if I'm feeling a little skittish, I will go to the previous swing high and put
Mm.
my stop there.
Okay. Okay. Um, so what's your profit target? Like what would you be looking to get out this trade?
See, that's the issue I have. It's
Mm.
like I see where their visual um no, what you call these things? Like stops, like Peter Rays or whatever.
Yeah.
I'm still learning lingo. But where I see an
Order
obvious
submitted.
visual,
Five.
that's where I would put my targets and my stops. It's not like a lot of times it's not the amount of money. It's just for in my mind, it's like this price got to here, this is what it's doing, and I just react that way and then I set my trades that way. And whatever the money I get, I know that's not prudent, but that's kind of like where I'm at right now.
Niggas using ACT words.
This is a NQ, right?
Yeah, it's the NASDAQ.
And then that's crazy because I want to sell from well, Branch is saying you want to stop that red candle he's talking about up there.
Mm-hmm.
That's would be my inch. I would be waiting for this gap to fill because we got the 5 minute closure inside of that gap.
Mm-hmm.
So my entry to sell would probably be a little bit higher than theirs.
Oh, got you.
I'll be playing a retracement again.
Okay.
But
All right.
yeah, let's
I'm
just
with
let
you.
it play out.
I'm with you. Let's press play. Let's see. Okay. Let's see what happens.
I'm thinking that gap would fill possibly.
Yeah. We'll see. But I put your profit target at this low, Ashley. Just to have like to know where you're going.
And we close outside that gap. I'm closing the trade.
Okay. So this is where people probably be doing a tootsie roll right here. Be like, man,
And see you close back outside the gap.
but man, it's a good trade. It's a great trade. So here, so now I'll be trying to move my stop loss.
Yeah, I
Nah,
normally move mine too.
now on honestly, Mike and Mr. Hayes, what we were talking about last week, like your profit target. So my ATM is already set for my profit would have been 25 points. I would have been out this trade.
Okay, cool.
It would have got hit. You see what I'm saying?
Cool. I'm with you. Whatever, skin your cat, however you skin it. You know what I'm
And
saying?
you know what I said earlier about on NQ not liking the fill or the retracement?
Mm-hmm.
It's for that very reason right there. We closed inside there. You think you got confirmation, and then I've seen it a lot, just go back outside the gap, but retracement is cleaner
Mm-hmm.
on NQ. And then,
Mm-hmm.
like I said, for
Order
EM,
filled.
Hey,
boom.
great trade. Great trade. So look, now when you enter, Ashley, let's make this a teachable moment. So when you enter, when you have a when you're convicted in your trade bias, you say you want to sell this gap. You said that you want to sell this gap. So that was a great trade. You just didn't know where to get out. Okay. You always look for liquidity, right? So I put your stop at this low. You could have put your stop at this low. You always want to look for lows when you want to take a trade and you enter your trade. So like for instance, if I would have took this trade, I'm like, all right, I'm entering this gap, I'm taking it to the low here or this low, whatever. You know what I'm saying? Because now I know what's happened. I know what's going on. Like even if I get stopped out, that's fine. But at least I know why I'm entering my trade, where I'm entering my trade, and where I'm getting out my trade. Like I'm
Right. And a lot of times when I see like you say where liquidity is, but if it's like around the same area, like you have relative equal lows, and then further to the right you have a swing low, and then you get further over to the right, you start to get those wicks relatively equal. I see that and I'd be like, okay, now where I put it though? And I just be confused between each one of those spots. And I get stuck. And so I just put it somewhere where it looked the most
Order canceled.
okay. So and that's good. That's great because and this is the reason why I wanted to start doing the market replay on Sundays instead of going over the price action from last week. So now in real time, you could process it in real time. You could see it in real time. So this is the stuff that I be saying on Sundays when the market is closed. Now I'm saying it in real time. So now you're seeing it in real time, right? So this is like this was September 17th, September 18th, whatever. You enter your trade. You said this was your entry, your gap. You got picked up. You said you put your stop loss up here. All your criteria was hit. So now I got my entry. I got my safety blanket. I got my seatbelt on, which is my stop loss. Now I just need my profit target. Right. So once you have all three of those things aligned, you golden. Now this trade worked out within 15 minutes. All right. Sometimes you might enter a trade. It might take 30 to 45 minutes for it to work out. That's also where your patience, comes into play. But when you enter your trade, and as I say, the market starts moving aggressively in the direction of your buys, it's okay for you to start moving your stop loss. Don't think that it's not okay for you to move your stop loss to lock in profit just in case the market retraces. That is fine for you to do that. It's okay because it's you as you trading, like each trade you take, you're getting better and better and better at it. And the more you see it, the more you recognize it. Like maybe 6 months down the line, you might take this same trade and be like, all right, cool, I'm taking it here. And then you might be like, you know what? I'm taking it all the way here. And then, and then you got your trailing stop on your trade, and then, you locking in your profit. And then you might leave the house and come back and be like, all right, how much I made today? But that comes with time. That comes with time. But once you see it once, you see it twice, you see it three times. It's the same thing each time, right? So we took how many trades we took today, y'all? Six trades we took, and we went 5 for 6. Meaning we on the right track. We're doing the right things. The thought process is there. You just got to trust it. That's it. You got to trust it. All right. So let's press play. We're going to go all the way to 10 o'clock. And because boy, it's 9:12 right now. So we got a couple of more candles. So now notice we swept these lows. Got a nice response. Now, Brian Day, this is the gotcha right here. I'm gonna pause it one more time. See, when we sweep a low right here like this, and we got a wick on a 5 minute like this is
right.
The 1 minute.
Well, you said this is what a what?
This is when I go to the 1 minute.
Okay, I got you.
See, now I'm looking at I'm gonna go to the 1 minute and see if we created a gap to the upside. See, now the 1 minute, okay, so we didn't. But it's like I want to see in that wick, in that 5 minute wick, I want to see what the price action look like on a smaller time frame.
Got you.
You know what I'm saying?
I like that.
But let's go back. I don't want Winston computer to break.
Let's
go back to the 5.
And one more real quick point to the wick you talking about?
This wick that we was creating on the 5 after we swept this low.
Okay. So you wouldn't wait for close?
No, y'all waiting for the closure, but I just want to see. I want to see the price action on the smaller time frame on the 5 minute. I mean on the 1 minute. What's going on inside of this wick? Because on the 5 minute is just a wick,
right?
But on the 1 minute is 5 different candles.
Exactly.
You know what I'm saying? So now let's go. Let me see. Let's go back to 1 minute and see what kind of. Not this is tradable now. Now you see, like we swept the lows. We got a reversal. You got your order block. Well, market respect the order block. You could take it to this high. Like you could play ping pong with the market all day long when you have price action like this, right? But let's just see what happens on the 1 minute. See how it plays out. Let me get off the 1 minute, bro. I'm not gonna hold y'all. Let me get out the 1 minute. Get off the 1 minute. Do a flip. All right. Yep. So I'm sure somebody would have drew a fib on that 5 minute wick. Concentrated encroachment of that wick, 50%. Whatever, whatever your trade, whatever you like to trade, whatever you see, whatever you comfortable with, that's your trades you take. So we took 6 trades today. And we kind of hit on 5 of them. The only one that we missed on was the one I took. The second one I took. But other than that, we had a pretty smooth day trading. But these are the things that, like as you trading, you talking to yourself through your trades and you looking at the higher time frame, seeing what's going on in the higher time frame. 1 hour. This 1 hour candle look heavy, right? So let's see what the 4 hour saying. Nah, you got 4 hour, low down here. So it's a bunch of things that could come into play as you trade, right? And y'all remember, my preference is the 1 hour being used as my daily chart because I'm not waiting for a 4 hour setup. I'm not waiting for a 4 hour gap or whatever. Now, if the 1 hour and the 4 hour align at a specific time, like I don't know, 9 o'clock, and it gives me a trade setup, then I'll be like, all right, cool. But like I'm not waiting for a 4 hour setup. I'm just not. I don't have the patience for that. But okay, so let's go back to the 5. Anybody see anything they would trade right now? Most people would probably be done. They were like, man, Ashley took a good trade. Brian
took a loss, big loss.
You took a loss?
Hell yeah, I took a loss.
All right. What trade you
would have got in on it, possibly. Well, yeah, it's after 9. So
yeah.
Probably would have tried to play this imbalance over right here on that green candle, the wick you was talking about,
Oh yeah, yeah.
my entry would have been when it closed inside. I would have been waiting up there at the top of it,
Right.
and then it blew straight through it. So that would have
Yeah.
been an L on my part.
Okay.
And that's just me coming look at it. Yeah, that would have been a loss.
So that okay, so we 5 out of 7 today. Cool. That's still a good percentage in my opinion. So when there's nothing to trade, like in this moment right now, like for instance, if I'm still at the market and I'm looking at these candles printing like this, I'm just what I'm doing when I'm looking at the market, I'm just talking. I'm talking like I'm just saying what happens. Like, okay, we got this, we closed above this candle, we don't have no true bias. And then if I need a trade, if I'm really looking to take a trade, then I'm going to like the 3 minute and see if so for instance, on a 5 minute.
You ain't running one of them establishments that I got, Mike, that I be visiting.
I got a question, Sensei, when you get time.
What you got? What you got?
So Mr. Hayes was saying where his entry would have been at, right?
Uh-huh.
We were a little higher than that. Where would you or would you measure? Where would you, and if you would, where would you measure to see where the entries were, like in premium or not? Like how would you find it out?
For this week?
No, we would branch, and remember we were trading two different things, boss. I was just gonna play the retracement.
You just gonna play this week?
Yeah. So I
wasn't
like I was gonna be. I was agreeing that it could go down, but I was gonna be out like that gap would have filled, and I was playing it right back down to like that pivot point.
As I'm saying, but you're still going short though, right?
Yeah. So
right.
it wasn't I didn't pick higher because of like the fibs. I was playing a gap retracement.
No, I understand that.
Okay.
I just wanted to see.
Okay, I got
I was just curious about
what your question was, Brandon.
If you were to see if our entries were in premium or where on those quadrants, if it was premium, where would they be? Like, and if you to see that you would fib it, right? And so where would you do that at? That's what I don't know. That's what I'm asking. Does that make sense?
Yeah.
All right.
So you need to put the fib on it. You want to put the fib on it, right?
But I don't know I don't know where to start that measurement. That's what I'm asking.
Oh, draw the fib. He's saying how you drawing the fib on it.
No, right? I know how to draw it.
On the whole range or on the candle.
That's what I'm asking you. Like just to see where our entries were. We took it a little higher than where he would have been at, but I just want to see, or is this even a play to see that on? Because I'm asking
about the gap, huh?
Yeah.
You talking about the whole? I think you're talking about the gap, Mike.
You talking about the gap?
Listen.
The gap she was selling.
I don't think y'all listen to me. I don't know. I don't know. Would it be the gap? Would it be a run? I'm just trying to see if this is something that you can get those measurements on. Like we talk about, selling in premium, buying in discount, right?
Mm-hmm.
I think what he wants to see is a quadrants.
Yeah.
Of where we got in there as opposed to where Mr. Hayes got in there.
And so I know on a higher time frame, that would be maybe a fib of something. If so, what would that something be? Does that make sense?
So it could be the fib of the 5 minute.
Okay.
So let's do the 5. I just had it drawn out. So look. So it don't make sense for me to go this low because what we talking about happened.
Yeah, you got to go behind it, right?
Yeah. So this was all right. So this is the new high, and this was the low. So we're gonna go from here to here, right? Before this new price action happened, right? So the gap that Ashley sold was in premium, the 5 minute range, right? So Ashley got in at 713.75 right here. That was her entry, premium,
right?
So of course, when you sell a premium, you gonna, and this might help you too, Ashley, when you're looking for your price.
Well, she stepped away real quick. She's not here.
Okay, cool. But so when you put the fib on the range, you put You put the fib on the highest wick and the lowest candle body.
Okay.
You could go wick to wick.
Showing you.
That's totally up to you. But for me, I go from highest wick to lowest candle body.
Okay.
So when you go from highest wick to lowest candle body, this is your range, right? This is your premium from 61, 76 on up. That's your premium. Your discount, 38, 23 to the even lower, right?
Mm-hmm.
Anything, 50% is always going to be what? Equilibrium on the range, right?
Mm-hmm.
So this will actually, and this could help you in finding your price targets to get out of trades, right? So your trade was you entered your trade at 713.75, right? That's in the premium of this 5-minute range. Also, it was a gap in premium. Everything aligned. So everything that fits your trade criteria was checked off. You got premium, you got a gap, everything's working in your favor. So you enter your trade here. Now, in your mind, you're like, damn, I don't know where to get out.
It's nostalgia right here, Mike. And I'm
Uh,
at the top, like, man, they didn't pick me up. And you telling me I hit. I was trying to be safe, Mike. Mike, like, I'm gone. I got me.
yeah, bro.
There's a
Yeah,
lot of
dog.
days we went like that, but
Yeah, dog.
you got to
For
do what
real.
you're comfortable with. So I ain't get the feel, and that boy then ran up, made out like a fat cat, bro.
So look, this is your premium, this is your discount, right? So you're like, I don't know where to get out at. So you look, if you put your fib on your chart,
Mm-hmm.
your highest wick, lowest candle body. Now, the reason why I didn't put it on these candles because these candles hadn't printed yet.
Right.
This ain't happened yet. So let's kind of just go over here. So
Nori.
So let's just say this is where you got picked up at. Now you're like, okay, I don't know where to get out at. Okay, but you got your fib on here. So you're like, all right, well, look, we got all these wicks in the discount. Let me just pick one, and that's my price target.
Mm.
Now, granted, you don't have like a PD array in discount. The PD array was this gap. Remember that we traded was the OG price target from earlier in the Zoom. Cool. That's all over and done with. So now this is a brand new trade. You enter your trade here. You're like, oh, I don't know where to get out at. Now you find liquidity. You're always looking for liquidity. You're always looking for liquidity. So you got these lows down here. You got this low down here. You're like, all right, cool. So now when you put your trade on, I put your profit target at this low. Of course, it got knocked out. Cool. But just keep in mind that when the market is trading like this, in my opinion, this is great price action. So when the market is trading like this, you always buying discount and you selling premium.
Mm-hmm.
You sold premium today. So if we sell premium and we buy a discount, well, I'm looking to get out my trade at discount. Simple. Like,
That makes sense.
Instead of kind of complicating it and over analyzing it, this be like, all right, cool. This is, we got these lows down here. We got to take this internal liquidity to external. That's OG. I probably haven't said that in a while, but everything aligns.
Mm-hmm.
You know what I'm saying? You got to take the internal liquidity, external. Okay, cool. I took the internal liquidity, external to this or to this low, but it's all about seeing it, trading it, and being comfortable with the result. Now, on your trade today, Ashley, I think that was like a $900 trade. Maybe it's more. I don't know. Let me look at the P&L.
Use that ruler, Mike. It'll tell you the
So it was an $800 and some dollar trade. That's a good trade, in my opinion, But just to like get the thought, like so much thought out of it. Like I don't want to be wrong, or I don't want this to happen. I don't want this to happen. Just take the damn trade. Take it. And then when the trade start moving in your direction, if you if you still feeling uneasy, just move your stop loss. Because if the market reverses on you, hey, I wanted to make $1,000, but I made $450. Cool. You know what I'm saying? And be cool with that. And be cool with that. And be cool with that.
Okay, I
And
got
be
you.
cool with that.
You're right.
All right.
Right, right.
Because I know I'm knocking on somebody though today. Because I know you be like, man, look, I was going to make $1,000.
Yeah,
600 more to go. I got 550 more to go. And then
yeah,
try to make that 550 and that 450 then turn to a negative 250.
yep.
Yeah. All right. Okay. So, but Brian Day.
Yes,
So
sir.
so if I go to the 1 hour, right? So it's in on any range. I'm about to put the puzzle together for you. On any range, on any time, highest wick, lowest candle body. You see? Now we bought discount on the 5 minute. We bought discount on the 1 hour. You see? It all makes sense. You got this order block down here in discount. See that?
Yep.
So on any range, so I could even go to the 4 hour and do it. That's how you know where you at, what you're doing, where we're going.
Gotcha.
My mama from uptown, your mama from downtown, all that. From the town, back of town, Hollywood. So right here. Now the 4 hour range is a little bit bigger. And hence why I don't really be
Gotcha.
okay in 4 hour streets like that. But all is all the same.
Yeah, okay. Shit.
So we got 20 more minutes left of trade, and I'm gonna just let it play out. I don't think nobody else taking no more trades today. Just gonna let it play out and see what happens. I want to see what happens when we come back to this. If we come back to this gap here on the 5. If we invert this gap, then what that mean? Higher prices, right? Yeah. So let's just see. And then we could kind of like go over the price action from last week. We're not gonna stay long. I think this was the most crucial part that we did today was really trading live and see what happens here. This is good. This is a nice price action. I like this price action. Ashley traded a reversal. She took the premium to the discount. Now the discount going back into premium. Now either we're gonna displace above this premium and start trading higher, or we're gonna just continue to trade inside of this range, and which is fine with me. Got a gap. Tap into that gap. What you gonna do with that? And this is like how I'm talking right now.
That's another one for me, Mike.
What you got? Another loss? Man, stop
No,
saying
that's
that.
a win.
Where you at? What you took?
You had the top, you had the gap fill, the retracement.
Okay. All right. I'm with you.
But I'm out. I'm out at the pivot point.
Okay. Okay. So
Right before the little buzzer beater.
Yeah. So that's 8 trades we took. So we 6 or 8 today. That's good, man. So let's see what we got. Uh-oh. Got an inversion. We got an inversion. No, we don't. Yes, we do. Come on, close. What you gonna do? Nah, I didn't invert that. All right. It didn't invert that. All right. Okay. I like this price action. So now, because now all we doing now is trading off the fibs. Y'all see that? I don't want to confuse nobody, but just hitting the fibs, respecting the fibs. And this is why I like trading during this time. The volatility, the volume, the movement is always there between 6 a.m. and 10. So we don't have to recap all the trades that we took today. We kind of, we're kind of familiar with what we took. We took trades to the upside, we took trades to the downside. So we went 6 or 8 today. Pretty good day. Now I'm gonna say this. I'm gonna go, let's just go to I'm gonna go to the price action from the last week, and then we can kind of get off the Zoom, because I know people attention span is not really as long as it used to be. And I'm talking to myself. Let this load up right quick, y'all. And then we're gonna go over the price action, what we can expect going into the week. You can go to the hood if need be. All right, here we go. All right, it took me a little semi. I took me a little semi going into close Friday. Y'all can see, okay, this is perfect, just like we just did in the market replay. This is the sim trade I took. And the reason why I took this sim trade, because I felt like I needed to press the button. I had the urge to press the button, so I pressed the button. When I get those urges, I try to do it with the blue screen, not the black screen. So the blue screen meaning sim. So I just took this sim trade. And I took it to this high. I think it got hit, but I had closed my computer, and when you close your computer on inventory, your private target don't get hit or whatever. But anyway, it was a gap. Yeah, it was a gap. Took that gap. But anywho, let's go to the daily. Let's talk about it. So let me move these lines up the chart. So from a daily perspective, I'm not gonna hold y'all, bro. I'm still bearish. And I know we got all these. I know, but I know. I'm still bearish though. So still inside of this gap, daily gap, right? So we got a volume imbalance. We got this volume imbalance right here. We got a volume imbalance above us. Me and Winston, when Winston brought up somebody else's name in the group, matter of fact, I might go back to that day, but let's talk about what we see right now. So from a daily perspective, we got, like we just mentioned, we got this volume imbalance here. We got this volume imbalance up here. We painted one side of the volume imbalance with a red candle. If we do a red candle, we got to do a green candle. So we tapped into that Thursday. Was that Thursday? Yeah, we tapped into it Thursday. So it's highly likely, in my opinion, that we could go tap into this volume imbalance above us and continue to the downside. That's just my opinion. I don't think the market is still extremely bullish at this point, and it could be. I mean, because what happens if we invert this gap, right, with a strong body candle, then okay, well, chances are that we can be trading higher, right? That's kind of like ABC 1, 2, 3 now. We then went over like 30 inversions on the market replay, so we should have an idea of what to do when we see an inversion, even on a high time frame like the daily, right? So let's go down to the 4-hour. So in the 4-hour, we got this price leg. We got this price. It's when you have a price leg like this, and you got gaps on it, but you don't have nothing inside of those gaps. It's flimsy. this could be a low resistance liquidity run to the upside, to be honest with you. But then you have this order block right here. You got this consolidation right here that could be used as resistance. Then you got a high that's above the consolidation. So we, going into the week, we'll know. But in my opinion, my bias is maybe I want us to be bearish, but we'll see going into the week. We still be closed inside of this daily gap. We still inside of the daily gap. I'm thinking maybe we sweep this high in reverse, take out this liquidity down here, come touch this volume imbalance beneath us, even this small daily gap down here that's beneath us. Let me draw it out. So going down to the 1 hour, you got your consolidation. Pretty much this is it's pretty much consolidation. Same thing as a 1 hour, as a 4 hour. You can have a low resistance liquidity run to the upside. You got this order block sticking out like a sore thumb right here. I'm thinking that we could trade to. Outside of that, we got the all-time high up here. So it's a lot of room to trade in either direction. Because we could sweep this high, this 1 hour high, going into the week in reverse, and take out these relative equal lows down here. You take out this swing low down here. This, so it's a lot of possibilities. And the things that we went over today with the market replay can give you a better idea and perspective on what you're seeing in the market and how to trade it, right? Because for the most part, we all trade gaps now, right? So you're looking for an energetic move in one direction. You're looking for a liquidity sweep first, and then an energetic move in the opposite direction, and you're trading that gap. The gap that Ashley traded earlier was golden. The change in the state of delivery that I took before that was a good trade. The change in state of delivery, the inversion that we saw, the first trade, that was, all those trades coincide with each other, and all it takes for you to take one of those trades a day, or when it presents itself, for you to be cool. You're good. Like, all right, I made $500. All right, or I made whatever your dollar amount, or for the week, or for the month, or for whatever, you make that with those trades. Always remember to cover yourself though with your stop loss. Knowing where to put your stop loss, knowing, where to put it, if you're gonna hug your trade, whatever, however you trade, you do it your way. All I'm here to do is help you to find the trades to take. That's it. I'm not here to I'm not here to tell you what to do. I'm here to show you how to do it, and what, how to help you see it, and maybe even talk you through it. That's it. That's it. But I said earlier, from a daily perspective, I wanted us to be bearish, but all the other time frames saying upside. 4 hours saying upside, 1 hour saying upside, 5 minutes saying upside. So I'm gotta agree with the upside bias, right? But if we backtrack, if we go back to what was Thursday's date? The 21st? Yeah. So this is the day in question that me and Winston talking about. Winston, would you like to explain what you saw on the charts?
Plead the fifth.
Oh, right. So, little backstory.
Order canceled.
Little backstory. This is the day in question, right here. Market this day right here. 906, 905. This is the day in question. So Winston comes to the group all hysterical, saying that this other guy called this trade, and he couldn't figure out how he called it and what he saw. And
I don't recall.
and then
I don't remember saying that.
okay, all right, cool, no problem. problem. You didn't say it. But so in my defense, I'm like, no, I'm in this trade. I'm in it. Like, what we doing? Like, just call me. Let's trade together, brother. So I'm like, why are you dependent on what? Anywho, so the day in question was this trade right here. So, and we could go look at it on a higher time frame. But this is the reason why I took this trade. I didn't get in at the top. I'm just not gonna sell this just because I just don't trade like that. So it was a liquidity sweep. You see these smooth highs over here to your left? Smooth highs, right? We swept that. Here's the beautiful part about that. We swept that on this price leg. Okay. And then we traded lower into this gap. Then we swept that high and all this stuff on this price move right here. So then you get an extremely energetic move in the opposite direction. So my entry to this trade was here. The same trade I took last week on the replay, the same trade I spoke about today on the market replay. Right here. Let me show you. Right here. Okay, it's also a gap. All right. I could have waited till the market traded higher. But see, when the market means business in the opposite direction, when you get energetic moves like this, it's like this, when you have two gaps on top of each other like this, I'm not waiting for it to come up here. Now, if and when it does trade up here and I enter down here and I'm wrong, I'm willing to take that loss. That's a cost of doing business. But I enter my trade here. And I'm gonna let y'all hold up. So, and price talking is always going to be swing lows. Always, right? So, and this is all right. And let me just do this too. This thing keep getting in my way. Let me just do this. Highest wick, lowest candle. Oh, you job taking. Yeah. The highest wick, lowest candle body at the time. Right? That was before all the other price action happened. Right? So you got your premium. Got this gap was kind of in premium. This gap was extreme premium. So you got your change in the state of delivery. I'm entering here. I'm taking it to the low. And that's just it. I'm taking premium to discount. That's it. Same thing we did on the market replay. It's repetitive. Every day. Every day you want, when you get price action like this. Now, some days you're not gonna get price action like this. And we all know that. We trade. Sometimes it's just gonna be a whole bunch of this consolidation and low probability trading condition. But when you have energetic moves like this, your roach antenna should go up. You know what I'm saying? They left food on the counter. I'm about to go in the kitchen. I hope nobody turn the lights on. It's time to party, right? So, like Winston said, what you call it, concentrated closing, roaches talking, whatever you call it. This is it right here. So when you get energetic moves in the opposite direction, now you're looking to trade. You're looking to enter your trades. You're looking to find something to take, right? So you enter your trade. Once you enter your trade, Ashley, your profit target is always going to be swing low. So for instance, you might not want to wait till we take out this low. And that's fine. You be like, all right, well, I'm getting out here. Or I'm getting out here. Whatever is your preference. Oh, that low, these lows have already been taken out. All right, cool. So you be like, all right, I'm taking this, I'm getting out here. Like it's just the market is always seeking liquidity, whether it be internal or external. So if we have internal liquidity and premium.
So in other words, we kind of overthinking. Because it's, yeah. Yeah, I appreciate that, Mike.
We do, because what happens is when we sit at the computer and watch candles print all day, it messes up our psyche. That's why I'll become adamant of closing the computer because if I don't have nothing else to do, I'll come sit at the computer and just watch candle frame. I don't know why, for whatever reason. It don't make me a better trader. It don't. But once you find your premium, you sell your premium, you buy your discount. All right, so you take your trade here, boom. Now this is a nice price move from let's say, well, into the 761 all the way down to 594. That's almost 20 points. That's a great trade. That's an awesome trade. But you might not be interested in sitting in the trade that long. But see, when the market is moving aggressively in your direction, man, listen, take them trades, sit in them trades. And even if you gotta move your stop loss and profit, and just lock in your profit and just let the trade work. Let it work. Just let it work. Because if your goal is to make $1,000 a week and you can make that in one trade, you ain't got to trade for the rest of the week. If your goal is to make $2,000 a week and you make $2,000 in one trade, you done for the week. You done. And I know Brian had mentioned your ATM strategy is 25 points. That's even better. That's like shows you the discipline that you're willing to take. I'm 25 points and I'm out the way. Once your price target get hit, your price target get hit, no matter what the market do after that. But since Winston wanted to plead the fifth and not tell the people about the trade and talk about the reason why the market reversed and this and this and that, then I'm gonna say my reason. Then hopefully he'll speak his truth.
The man say he used the bot, bro. The real trader bot, bro.
All right, so
That's it. I give up.
so the day in question was this day right here. So we traded back into this market imbalance right here. So believe it or not, throughout the process of the day, this candle was red, as you could tell by the wick. It had sold off all the way down here, and then it reversed and traded higher. But it opened, traded higher. We swept the previous day's high, traded into the market imbalance. Once you trade into the volume imbalance, it violently moved in the opposite direction. So when that happened, I'm whatever the reason is that it happened, I'm looking to take a trade now. I'm looking for entry. So we go down to the 3-minute. This is a trade. This is another trade that with the same price action that that my partner had called me and told me to take, and it's gonna look eerily familiar to what we was talking about earlier. And then after that, we could be done. Cause we talking a lot. So give me 1 second. I'm just going to scroll over to make the screen a little bigger. All right. So my partner called me. He was like, the market trying to sell off. I don't have no trade. I said, yes, you do. He said, no, I missed the move. I said, no, you didn't. He said, well, I could get in that. I said, if we invert this gap, take that inversion. And what we did, we inverted that gap. The same thing we've been talking about all day. It happens every day. It happens every day. I said, look, take this inversion. Take it to this low. Simple. You're out the way. Inversions. So once you see this stuff in the market, you can't unsee it. It makes it easy for you to trade. You be like, man, I missed the move. Look at all this. I'll be retraced back into this gap. No, you didn't miss the move, brother. You didn't miss the move. Because if your price target is these lows, first and foremost, if your price target is here, and then we trade down and we reverse before taking out these lows, now I'm interested in entering the market because I know we coming back to take these lows out. That's trading one-on-one. So trading back into this 3-minute gap, you missed entry. Okay, boom. I said, look, we got a 3-minute gap here. If that gap gets inverted, you take it. We inverted the gap on this candle, this red candle. Very next candle trades back into that gap and goes. Same thing we've been doing all day. It happens every day, all day. Flip side of that, we swept the lows, we reversed. You see this gap right here, got inverted. Use it as a, shall I continue? Gap got inverted. This gap on a price leg that's swept liquidity, you got your gap, inverse it, use it as support. Boom, close above this gap. Did it have to come back to this one? It could have. If it wanted to be nice, it could have came back. But you could trade on both sides of the market. You're not late. You ain't missing nothing. This is what patience comes in at, right here. When you know, when you're looking for, but you know what you're looking for, hey, look, I'm taking it. And this right here this is a high percentage trade. Because you know you swept a high time frame low, whether 1 hour, whatever, 4 hour, and we reverse, right? See, the leg that sweeps liquidity, this price leg, 1, 2, 3, red candle. You got a gap on that. Once that gap is inverted, even this one, the one beneath them, once it's inverted, expect higher prices. Enter your trade. So for me, if I'm taking this trade, I'm entering the bottom of this gap. My stop loss going below the candle that inverted the gap. Right? I'm not putting my stop loss way down here. I'm putting my stop loss at the bottom of this candle. That's just me. Can it retrace deeper and stop me out? Yeah. And that's fine. But once you see this stuff, you can't unsee it. It's the same thing we did with the market replay. It's the same thing that happened Thursday, probably happened Friday. It's the same thing. It repeats itself repetitively. So all you got to do is be confident enough to take the trade. So even if you take this trade and you're like, man, my bias is bearish, I don't want to sit in this trade for a long time. So even if you hit this, if you enter this trade here, you be like, I'm taking it to this high, and I'm out the way, and you're done. So you got in at 607, 608, let's say 610. You got in at 610 and got out at what? 711. That's 100 points within 9 minutes. That's a $1,000 trade in 10 minutes. But we talking about other people in the group chat though.
Wait, so I'm sorry, I came in on the tail end of the story. So pretty much a friend called you to get your opinion, and they didn't take.
So he was like, because he saw the price action, right? He saw this move happening. I was already in the trade, so he saw this move. He was like, he felt like he missed a trade. And I was like, you didn't miss a trade, because once we invert this gap, this 3-minute gap right here, once we invert it, get short, and you get short. You take it to the low. Take it to the low. Take it to the low. Now, and we retrace, and we sweep a higher time frame low. We reverse. This gap gets inverted. The price leg that sweeps liquidity. They got a gap on it, right? That gap got inverted. Right here. Let me highlight you. Let me highlight you. Right here. Up in here. Gap got inverted. Use it as support. Boom. So you could trade this market in any direction. You just got to know what you want to trade. And once you see it, you can't unsee this stuff, bro. It's not as complicated as we make it.
Right.
So even if you would, like I said, if you would have entered this trade here and got out at this swing high, you're like, all right, well, that's 100 points right there. And this is 3-minute candle. So you enter here. So 3 minutes, 3 minutes, 3 minutes, 3 minutes. So 12 minutes. You're in a 15-minute trade. You made $1,000. But like I said, once you see this stuff, you can't unsee it. You just got to be patient enough to wait for it to present itself. That's it. So from a daily perspective, the market still says upside. Um, from a 4 hour perspective, it says the same thing. 1 hour, same thing. 5 minute, even the 5 minutes saying the same thing. So um maybe I'm expecting a little retracement back down into this gap right here and into the next leg higher, but we're gonna let the market tell us what it wants to do and we're gonna trade it accordingly. I think the market replay when we first go in the Zoom is very helpful. People are able to see trades and talk themselves through the trade or even bounce ideas off of other people, which I feel like in turn is going to make everybody a better trader. I think it's more beneficial. Like I said, it's more beneficial to y'all just coming to the Zoom and saying what happened last week, and last week didn't already happen. So it is what it is. But when we trade market replay, we actually getting the reps. We're getting the reps. So it's like, okay, we see the inversions, we see the liquidity sweeps, we see the energetic moves in the opposite direction. We see it. It's not just me talking about it in past tense. We trading in real time. That trade Ashley took today was a great trade. The trade is you, but you just got to be confident in trading what you see. That's it. But do we need to go over the ES? I doubt it, right? No.
No.
All right, cool.
Hey, brother, I want to say I appreciate you because like I felt like I was hitting a wall in like how I was learning. Like I would get the information, like I understand it, but when I go to put it in practice, I'd be like, I know I understand what I learned.
Mm-hmm.
But when you do this, it helps put like the final touch to help me understand what it was I've been learning and trying to practice.
Yeah. And that's part of the process. It's part of the process. You just got to knock that wall down. That's it. Karate chop that back.
Thanks, brother.
But all in all, just like everybody has a different method of why they trading, whatever they see. Winston trades of volume imbalances and gaps and stuff like that. He has a different perspective than I have. Grande has a different perspective. He's a consequent encroachment guy. He's a wick guy. I'm a gap guy. So it's great to get different perspectives, and it's great to put it all in practice. And everybody can see, okay, I could take this from you. You could take this from me, Winston. I could take that from you. You know what I'm saying? And it makes you a better trader. And you're confident in your trades, win, lose, or draw. And you're not sitting at the computer, with your blood pressure high and you sweating because you enter the trade that you end up in this trading because this is not something that I practice. So you play how you practice. So on Sundays when we go over these Zooms and we talking through it, don't be on here lying saying, I would have took this trade and knowing that you wouldn't have took that trade, and then you take that trade during the week and be like, man, I lost. Oh, I blew my account. So, you know what I'm saying? Just be transparent, be real, and that's the only way you're gonna get better. And so this is the second week of us doing the market replay. We're gonna probably do this going into the near future. I'm gonna make this announcement though, like I'm gonna take a break from the Zooms. Going into like the holidays, going into like after Thanksgiving, going into Christmas, I'm gonna probably take a break from the Zooms just to get a mental reset for the market going into the new year. But yeah, but that's neither here nor there. I'll probably let y'all know the week before I do that. But if anybody has any questions about what we doing, what we talked about, what we going forward into the week, why you feel like the market bullish, whatever. If now's the time to ask. I know we've been on here for a while. I know people got stuff to do today. So I don't want to hold y'all much longer than what I have to. But and I know we still got to go to the hood. We're gonna run to the hood right quick too. So, but if you have any questions, feel free to ask them right now while we got the charts up, and we could kind of get them out the way. All right, cool. Nobody? That's perfect. All right.
Thank you, brother.
No problem. Winston, It's your time to shine.
So anybody got a stock they want to look at?
Outside of Spy and Triple
Yeah,
Q.
yeah.
Uh,
Going once, going twice.
She said,
Anybody have any stock they want to look at?
Spy. Duh. Since Mike gone sabbatical.
I'm just taking a break, bro. My brain tired, brother.
You still a host, man. Hold on.
Oh, my bad. My bad. I got you.
You see the screen?
Yeah.
You got a week left on your contract now? I know he ain't leave at the access to come here, bro. Ain't no
She
way.
said, on when I had you on mute.
Friday,
Yeah.
and what it is, you got a 610,
I had a 605.
605. We didn't break down, but we didn't go higher. Keep our fingers crossed. We're on the high side, so we need like 10 more bucks. Go to daily. Do that right quick. Let's see if this got the new word I learned, inverted. Let's see if this gap got inverted. Shaboing boing. It did. Correct, Mike?
Yeah.
Let's go take out the high. Oh, there we go.
All right.
All right. So take out that high. Hopefully we get the whole shebang bang. Huh?
Give you an entry because it inverted the gap on Thursday. It's a daily, right?
These are the dailies.
Yeah,
But it's Friday
Thursday inverted the gap.
here.
Yep. And then Friday give you another entry.
Wait, inverted is filled.
Inverted is closed above.
That's Friday.
I'm talking about this gap right here.
Which one?
Look at this gap, bro. Yeah.
The one I got marked.
No.
Which one?
You see? Look.
Here?
No, go to your left. Right. No. To your right. Keep going. One more. One more. Boom. Right there. Look at it in the candle, but you know that the other.
Right here.
No, the two red candles.
Oh, you talking about this? That's what's your name, huh?
Well,
Volume
it's not a
imbalance.
gap. So that's not a gap on like the ES with the continuous contracts, but it's a gap on SPY.
But where your third candle at?
Bro. Okay, let's call it a volume imbalance. Then. Let's call it a volume imbalance.
I got you.
Because I don't
Yeah.
want let's not confuse it. But it
All
closed
right.
above that and it came back.
Yeah, now we looking to the upside, brother.
That's it to the upside.
So I'm hoping we get us a strong move out the gate. It don't have to come down that far. Only a few cents from where it closed at. And we should be taking off, trying to get us some more highs. Take out this high, which could be if it come early enough, I'll put it like this. Don't try to hold it till 605, because it might just go to 601 and stop there for the week. So by us not having the 2 weeks on a contract anymore, we need to get out a little bit earlier so that data don't kill us. So if it's running, I'd say like Wednesday, we can hit 600 by Wednesday, just get out. If we hit 600 tomorrow, try to get your 605. You got that?
Okay. Yeah, I heard
So
you.
the earlier the better. If by Wednesday we only looking for 600, but if it go to 600 tomorrow, stay in it. So we probably gonna go see 605 then six. I think I told you it was like 609. Yeah,
Right.
yeah, 610. So let's see if we could get it early, not late. And that's it. Oh, y'all got another one.
The triple Q.
Nah, we good. I'll text y'all.
The triple Q.
No, that's it. Let me get the Zoom though.
You put the Zoom for last week up, when?
Yeah. Mag been on them. Mag been making sure that I'm doing the right thing. All right.
Same thing. Same thing on the triple Q.
Uh-huh. Yeah, they lines
Yeah.
they go test the high again, 514. I know you need to get out of this gap though.
Yeah, you got it.
This one needs to fill at like 510. I don't think you got no. That is. I ain't trading. I only went over spot because I'm there. I'll
Okay.
wait to see what happens.
Okay, that's cool.
But they held the latter part of the fib, so let's see what happens. That's a day early. This one actually, yeah, well, it didn't take out the high again. We broke below what I would want to call what auto block, right, Mike?
Yeah,
And then we closed right back above it.
yeah. That look
So,
that look promising. Just a weekly, huh? Yeah, okay.
yeah. Well, yeah, that's all I got, bro.
All right, bro. I see y'all in the chat, man.
Oh, you taking break from the chat too after Thanksgiving?
No, man, I just from the Zooms. From the
Okay.
Zoom. Just sort of like, a couple of weeks before Christmas. I'm gonna take a little mental break, dog.
All right.
Yeah.
All right, Carl. In the chat, man.